Yeah, hello and welcome to another update video about Polygon. So Polygon is now testing, one second, I just need to move this. So Polygon is now testing the 50% retracement that I communicated in the last video yesterday. Not only in the last video, actually, we talked about that in the last few days, right? That we could be here in a wave 4 in an ABC structure. Deep pullback, still valid, though it's still a valid ABC structure, but we need to hold this wick. I mean, we haven't got a break of support, right? People always ask me, is this a break of support? Well, the price is recovered, right? So it's not a break of support because the buyers turned up at the 50% retracement. These retracement levels and support levels are usually not invalidation points. The invalidation points are, as per the Elliott wave rules, and an invalidation in an impulse, the wave 4 must not break into the price region of wave 1. Well, that's down here at 44.3 cents. Well, that's the invalidation point. Would I call it a wave 4 if we go down that much? Probably not, unless we're dealing with some kind of a strange diagonal pattern. But I can tell you, if we are in an impulse here, which I'm tracking still, then the wave 4 should not break and sustain below the 50% retracement. Really, this is the last option for the bulls to turn up in an impulse. Does a break below that last low invalidate upside? No, the wave count is still correct, the wave count is still valid, but it would turn into something different, right? And we normally want to avoid that. It would probably morph into some kind of a diagonal pattern at best. So it might be, 1, 2, and then like A, B, C, maybe the third wave then topped here already, circle 3, but that would be a bit weak for the third wave because it only reached the 123.6 extension. So it would open a lot of other questions, really, open the door to a lot of other questions. It would, of course, as long as pullbacks remain corrective, I would still look for higher prices, but it might be that we're dealing with a much larger correction, which then must hold, however, above the wave 2 low that formed at 35 cents. That would be the next bullish option, that the 35 cent level is next key support if we're dealing with a diagonal, because then it's like 1, 2, A, B, C, and 3 or something like that. So diagonals are always more difficult to interpret, but we'll see if that low holds. If it doesn't, I will take a look at the structure and then have to provide an alternative interpretation. As I said, it will likely be some kind of a diagonal, but it will be messy. So for now, I think for short-term trading, this last swing low is key. If we break below it, the next support levels are around 41.7 cents, but that is weak support. The more important one, also for a diagonal pattern to the upside, is located at 35 cents, which is here the swing low from the 14th or 15th of November. I would still prefer one more high, but if Bitcoin has started a larger correction, we'll likely not get it. Also, the reaction is quite weak to support. But one more high, that's what I said, wave 3 first target, 65.3 cents. But bear in mind, just because on the 1 hour chart support breaks, it doesn't change the entire assumption that a more substantial low has formed on the 4th of November. It would make it more difficult to track, and it will be a first, let's say, I would say disappointing development, but it wouldn't necessarily be bearish and, we're breaking down and everything. That's not the case. That's the update about Polygon. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.